Hello and welcome to this stock analysis update for Shell PLC. If you take a look at my channel, see that 9 months ago I did a 51-minute really long video on Shell where I go into a lot of detail. So if you're interested in Shell, do take a look at this. But this is just going to be an update video for what's changed since then, particularly in light that they just came out with their full year results for 2022. Before I start, please remember that I only do these videos for fun as a hobby, and always consult a professional financial advisor before making any investment decisions yourself. So Shell are the UK's largest FTSE listed company and the world's 5th largest oil company. We can see that in 2022, half of their profits were from integrated gas, with about a third from their upstream and 5% from marketing and 10% from chemicals and products. I'll dig into what all these are in a moment. They made a lot of money from the sale of liquefied natural gas to Europe in 2022 as a result of Germany's energy policy and what that caused when Russia invaded Ukraine. For an oil company, they're paying very mediocre dividends of only 3.9%, but for the last few quarters, they've been coming out with 4 billion of share buybacks every quarter. They don't like paying high dividends. They're in enough trouble as it is with all the people that hate them for being an oil company, and it's bad optics paying high dividends, which is why they tend to go more with share buybacks. But personally, I wish they paid higher dividends. They have this powering progress strategy which came out in 2021, and they've said that they're going to stick to that in 2023. According to this strategy, from their free cash flow, they put about half of that into their investment plan, which is mostly just maintaining their assets as they are, besides tweaking towards natural gas away from oil and dropping their oil production overall by 15%. But then 14% of this investment plan then goes to investing in renewables. About 20 to 30% of their free cash flow they return to shareholders, and they were obviously at the upper end of that in 2022. And any excess remaining money they have, they use to accelerate the move into renewables and also reduce their debt. So to look at each business segment more closely, integrated gas is their liquefied natural gas production, transport and sales. And there's also seems to be some natural gas in there as well. And then upstream is oil and gas, exploration, production and transport. Now there's gas in here as well, and it's been hard for me to pin down from looking at the annual report and stuff how much gas is actually in the upstream and how much is in the integrated gas. But generally I think the integrated gas is mainly their liquefied natural gas, whereas the gas that's in their upstream will be gas that can then be piped locally for use. Now actually 85% of their revenues that come in the upstream segment is actually inter-segment sales, where they sell to their own oil refineries which sit in the chemical and products segment. The chemicals and products segment is the refining and also petrochemicals. But then they also put the trading of crude and refined oil in there as well. Marketing is their petrol stations, their EV charging, and then also lubricants goes in there, as well as biofuels gets put into that bucket for some reason. And they have this separate renewable segment, which is a new segment. They actually switched around stuff, what they put in each bucket last year. So the refining went from marketing to chemicals and products, for example. But this makes it hard to work back and look at how each individual segment's doing historically. But then when we look at profits, we see that about half of their profits were from integrated gas. And obviously they had a real bonanza in 2022. In order to make up from the gas that wasn't being provided by Russia, Europe had to import a hell of a lot of LNG. And so Shell obviously stepped in and then made a lot of money from that. Then upstream is over a third of their earnings. And surprisingly, marketing and chemicals and products, which includes refined products, are kind of a small contribution. And there's a problem here that because they sell 85% of their, because 85% of their upstream sales goes to actually their refineries, they can obviously charge higher or lower, and so they can shift profits from these segments to this segment, which I think they probably do for tax reasons. And so it kind of makes it hard to assess between these individual segments how they're doing. But we do have the new buckets going back on a quarterly basis for the last 2 years. And what we can certainly say is the integrated gas, which actually does operate independently of these other ones, has had a bonanza year in 2022 when you compare it with the historical levels. And the higher oil price obviously had done very well in the upstream. And even if they did better in these other things, they're kind of always restrained by how they shift the profits about. So the main message really is they've done really well from high gas prices and high oil prices. Renewables is perpetually loss making. And actually, don't be fooled by this spike up in Q4, because when I looked into it, that was a bit of a accounting artifact. That's why renewables didn't show up in the profits, because they don't make any profit from renewables. So we've determined that they made a total bonanza from LNG in Europe last year, and the price of oil going up has also been really beneficial. So we've really got to think about the price of gas and the price of oil when we look at Shell. We see here Brent crude versus the Shell share price. And actually, historically, there wasn't always a correlation. But since 2015, there was a strong correlation. And actually, in the last couple of years, the share price has lagged the oil price. So that looks actually all quite positive. Now, what's interesting when you look at the Shell share price is that in terms of net income, in 2019, if you use that as a base year, because there were less divestments going on, so I think it's better to use this number. In 2021, the amount of net income doubled, and then it actually quadrupled in 2022. But when we look at the share price in 2021, despite there being double the net income, the share price was lower. And now in 2022, following the quadrupling of their net income, the share price is still only roughly the same as it was back in 2019. So generally, we're still kind of in a good place. And if the market's caught up, even if we don't have the same like LNG bonanza this year, we could kind of expect them to be making 2021 numbers, and the share price kind of looks good. When we look at the price of oil, we see that it's much higher even now than it was in 2019. And so with the oil price trends, we're kind of fairly happy at the moment. It's hard to know what's going to happen next, though. So you've got things like the Strategic Petroleum Reserve. Joe Biden can't keep on selling out the SPR for forever, and then things like the opening up of China. But then you've got to weigh that against, is there going to be a worldwide recession, which would definitely crash the price of oil. So overall, obviously, it's a case of understanding those risks, but the kind of trend generally in terms of oil looks reasonably good. However, when we look at gas prices, even though they still are double what they were back in our 2019 base year, this actual current trend is really alarming. Now, obviously, it's going to equilibrate a bit, obviously, soon. And we're going to have to watch out for that this year, and hopefully it will kind of stay roughly around the 2021 levels. In which case, there's no need not to expect a return of the 2021 numbers. But otherwise, this is a big concern that we're going to have to keep an eye on. If that trend continues, you really have to start to doubt a bit about how Shell are going to be able to continue with their good profits. So onto the history, and go back to my first video when I go into detail about all this stuff. But the general story with Shell is one of managed decline. they gradually have been selling off their oil assets. And since I did my last video, the only news story is they got a new CEO. So they've got this guy now, YL Sawan, as their new CEO. And he's a Shell lifer. He's been at the company a long, long time. And it was more like a replacement because the existing CEO was kind of retiring. So not like no dramatics there surrounding that story, and otherwise no real big ticket items to be honest. And that's actually, as you'll see from my last video, that's what I liked about Shell. They generally were more about tweaks than any big changes to their assets, which is why I thought they were really well positioned to make money from selling oil and gas, which is what a oil company is all meant to be about, compared with some of their peers that seem to be doing all these gymnastics and rather eccentric changes to their structure. I liked it how Shell were kind of boring that way. So I'm now going to dig into my updates for each of the business segments. Obviously go back to my previous video when I go in more detail on that, but integrated gas, so that's natural gas exploration and production, and LNG production, transport and sales. And I can update that the LNG sales ticked up a bit. In terms of new news stories, they've obviously cancelled all their Russian projects, and they've made some investments in this area. This is where they're tweaking away from oil and a bit into LNG. So here we've got where they've got all their LNG liquefaction plants in the world. And you see that the natural gas is often produced in areas of the world where it's not really needed. Then it gets turned into liquid at these plants. And actually, Shell's only regasification assets are mainly in the US, which is not a good place. Total Energies have got it better because they have their regasification more in Europe, which is where the highest prices are. So it's a shame that Shell's are in the US where the prices are the cheapest. However, they've got a massive excess here of LNG that they produce. And so that's how they made all this money last year. All this spare LNG they had, they can choose where they ship that to in the world. And obviously they shipped it to Europe where they got a massive sales bonanza from that. Onto upstream, and no updates for this slide. But for the news, they cancelled all their Russian stuff, obviously, and they sold some kind of smallish size assets, which are mainly oil and gas assets in California, the Philippines, and Malaysia. So we get a continuation of this managed decline story for upstream. For marketing, and that's their Shell garages, their EV charging network, lubricants, and biofuels. There's only really one news story, and that's they bought Nature Energy Biogas for 2 billion. So chemicals and products, and that's their petrochemical production and sales, pipelines, and they also throw in crude and refined oil trading here, as well as this bitumen business. So I can update that the petrochemical production reduced even more in 2022. This is a little anecdote for you. I went to my local fish and chip shop a couple of days ago, and they told me that they're now banned from using polystyrene trays. And so that just show you how there's this big war on plastic, and so this explains why they're having to reduce their production in their petrochemical plants. Got no updates for those because I've got to wait for the annual report to come out. Currently, I'm only going on the full year results data. And here I've got where they produce their oil and then where it's refined, which is actually split between mainly the US and Europe. Interestingly, the UK is about half of the Europe here in terms of their oil production. And I think it will be a lot less of that in a couple of years' time, thanks to Rishi Sunak's taxation policy on oil companies. So really, a general comment though is that their oil production tends to be in safe locations compared with many other oil stocks. In terms of news, they shut down an oil refinery in Texas, and they built a chemical project, and they built a chemical plant in Pennsylvania. So in terms of renewables stuff, you can see here how they have about a 2 gigawatts of installed capacity now, which brings them in line with BP, but they're still way behind Total Energies. And there's only one bit of news flow, which is a zero point 0.8 gigawatts of offshore wind project in the Netherlands. So onto their numbers, and I've already gone through this, but it's just a amazing improvement in their net income. And actually, from similar revenues, they managed to achieve much greater net income. And I think that may reflect how they've been doing some divestments in their oil infrastructure. And so what's left is the better, and so what's left is the more efficient assets. Then also there's actually just the price of oil. But the general message though is that with the higher oil and gas prices, they've now managed to quadruple their net income. As we see here, their net income history, absolutely fantastic. Of course, as we've established though, I'm really expecting them to return to their 2021 numbers, as a lot of that was down to the LNG. And here I have the breakdown of the segment earnings, and we see how the LNG went up to 22 billion from only 8 billion. And obviously that was because of what happened after Russia invaded Ukraine and Germany found itself having to scramble for any gas it could get, which came mostly through LNG imports. So I am expecting it to normalise around how it was in 2021. But as I've said, the share price is actually still quite reasonable based on that. And then, of course, on top of that, I'm going to have to consider the risk of worldwide recession and the current nasty trajectory of the natural gas price. Their assets are surprisingly stable, and the only thing to point out here is how their current assets are increasing massively. And we see here how the cash is piling up from about 18 billion in 2019 up to about 40 billion now. In terms of liabilities, the only thing to point out is that they still have 75 billion in debt. And I really am disappointed that they have this amount of debt still. They did say, however, in their analyst update only last week that they are planning to now focus on reducing debt. And I say it's about time. So they've got a price to book of about 1.2 and price to earnings of about 5, according to my personal calculations. So they still look really quite fairly valued. Now, I'm a bit curious as to why the revenues now were similar in about 2018. Now, I think that's because of some massive divestments they did then. If they hadn't sold all of these shale assets and LNG assets back then, which were huge divestment programs, just imagine how much money they would have made last year. But that was part of their divestment strategy. And really, the main thing is though that they're still reasonably valued. And just look at how the cash is totting up, and the net income's totting up to as a proportion of their net assets and their market cap. This profile looks very, very healthy. The fly in the ointment being perhaps the debt. Now I've added free cash flow, and you can see how free cash flow. Is also looking very healthy, and is relative to these other numbers. And this encapsulates to me the story of what's been going on with oil stocks, and the main reason why I invested in them in 2021 myself. The situation with Shell is the CEO is being taken to court by Greenpeace personally, effectively because they're accusing him of environmental crimes by virtue of the fact that he's CEO of an oil company. You've got governments taxing them. You've got all these windfall taxes and all kinds of other things that governments in the West are doing to demonize these oil companies and stop them, and discourage them from making oil investments. They have been investing in renewables as much as they can, but it's actually hard to find new renewables projects that make sense. So they really are unable to invest in new capex in oil and gas because and so that leaves them with this massive free cash flow, and then the ultimate outcome from that is it's really positive for shareholders. So looking at their cash flow statement, and they made a whopping 68 billion from their operating activities in 2022 and 2.4 billion from disposals and net investment inflows. They paid 24 billion on capex. So bearing in mind, without this environmental climate of fear, they would actually be spending more than that to help replace the oil assets as they run out. But they can't do that because of how they're being demonized by the current politics. They pay 7.8 billion in dividends and 90 billion in share buybacks. 8 billion they spent to pay off debt, about 4 billion on interest on their debt, which I think is too high, and about 4 billion on derivatives. That's where they have to protect the price of shipment between when they stock the ship and then when it's then delivered. There's 0.7 billion in FX effects. So overall, that made up for 71 billion coming in, 68 billion coming out, a 3 billion a 3 billion cash gain. Now, when I take out the things that they don't have to do, we see that they have 68 billion in operating activities. And then after the capex, which they have to do obviously, and they're paying the interest on their debt, assuming they pay the same dividends, they've still got 26 billion of excess gains, which a lot of which, of course, they used obviously to pay off debt and for share buybacks. But that's 26 billion of positive money that they can use to do share buybacks or paying their debt. And you can see that their cash flow statement is incredibly healthy in 2022. Extremely impressive. I mean, I can't think of many healthier cash flow statements I've ever seen. The shareholder situation didn't change in 2022. And I've looked at the sector situation. Now, unfortunately, this sector code, it includes coal as well as oil and gas. But you see that when we had the COVID crisis, plus the war on oil that really came to a head in around 2020, we see that we really did crash well out of the long-term trend, and so it really was sensible for me to start investing in oil, which I did back then. We're now obviously there's been big gains. Actually, a lot of this could be from coal, which has done even better than oil and gas. But still, based on this sector analysis, we're still in an okay spot, really. So that completes my updates on Shell. Really, the main thoughts are that a lot of this bonanza came from LNG sales to Europe. It seems that the prices will normalise. I'm guessing more 2021, but there is risk here, and that risk of this trend is definitely something to really highlight as a risk for Shell. But assuming it does normalise, and looking at the oil price trend and weighing all the different factors I went into around the oil price, my base case really is a return to the 2021 numbers. And so really I'm thinking, would I invest in Shell now? Definitely not. But given that I invested in them actually originally in 2021, and then I just switched from BP to Shell in 2022, but given that my oil investments started in 2021, I'm quite happy to hold on here. And what I've decided to do now, obviously, I also consider that I've got a very low percentage of equities in my portfolio overall anyway, so I factor in that for my own personal situation. But for my own personal situation, I've decided to raise my stop loss to make it like a trailing stop loss. And I've set it at a new 20% value, which would actually be slightly more than my original purchase price. And I'm quite happy to sit back and see what happens this year with some level of protection when I'd sell half if they hit that stop loss. there's an overall risk of worldwide recession sinking in to the FTSE 100, which is like a risk. And also, we've already got alarm bells going in terms of the natural gas price, because we want it to equilibrate above where it was back in 2019. We're worried about the current trajectory. So that's a clear risk to be keeping an eye on for Shell. Otherwise, when I look at what's going on financially with them and their valuation compared with, and how they're so reasonably valued still even now, I'm not really overtly worried at the moment. So here I've summarized why I've decided to hold on to my Shell with a trailing stop loss. And so this completes my video on Shell. I do hope you enjoyed it, and good luck with your own investments. Please read the disclaimer. Remember that prices can go down as well as up.